Hey guys, Chat Trace here. In this video, I want to show you why you should stop using support and resistance because this works way better. Now, most people, they'll see a high, they'll see a low, they'll go on all these different time frames and start marking all kinds of different support and resistance levels. And before you know it, you have 80 different lines on your charts and you don't know which one to actually use or trust. So that's why in this video, I want to show you how to make a super clean looking chart like you see on my screen here, where all the levels are labeled, you know exactly what they are and what they're used for. And you can see today alone, using the levels I have marked in my chart, I made just under $6,000 in total P&L. So let's go ahead, and what I'm gonna do is I'm gonna clear all these levels. We're gonna start from complete scratch and show you which zones to actually mark, which ones have the most weight, and how to actually label and trade off of these levels you see on my screen. All right, so the first set of levels that I like to mark is the weekly lows and the weekly highs. Okay, so going into a brand new clean chart, this is on NASDAQ, by the way, this is what I like to trade. First thing I'm doing is I'm gonna go to a weekly time frame and we're gonna mark out the weekly lows and highs. So first thing I'm gonna do is I'm just gonna grab a horizontal line and I'm gonna grab the week high. Okay, so this is just the top of the candle. We're gonna make this red. And we can also go up here and label this. So I'm just gonna put weekly high. Then I'm gonna make this red. Then I'm gonna do the same thing and mark the weekly low, which is right here, the bottom of the candle. Okay, so you can see very simple. This is the first set of levels I have on my chart. So going into next week, these levels should act like magnets because they have a lot of liquidity in them, right? So maybe we get long right here and we can use the weekly high as a target. Maybe we come down here, we do a false breakout, and then we start trending up. We can use this level as a potential reversal level, right? Maybe there's a liquidity sweep here, or we break down here and then we retest this level and we can trade off of the retest, right? So there's multiple different ways to actually use the levels. But just to give you a perspective, right, these can all act as targets or places to look for trades, all the levels I have on my chart, which is obviously super important. Okay, next level I like to mark once I'm done with the weekly time frame. Right now I can go to yesterday's highs and low. Okay, so if I'm going into the trading day, you know, I can usually do this the night before. I can mark out yesterday's highs and lows. So now I'm going to go over to the daily time frame. So now we're just going to grab another horizontal line. We're going to go to yesterday's candle, which is this right here. And yesterday was also the weekly low, so we don't have to remark that. So I just need one line at the top of this candle. Remember, this is a daily time frame, so I'm just going to put it right here. And we're going to label this yesterday's highs. Okay, so once again, now I can use yesterday's highs as either a target for today or as a level to trade off of, a break and retest, a failed breakout, liquidity sweep, whatever you want to call it. This is another key level we can start to work with going into trading tomorrow or, you know, in the morning. Okay, next important levels to have is going to be your supply and demand zones, okay? So supply and demand zones are basically levels where a lot of orders are being placed and we basically got a really aggressive buying or selling off of those levels. Areas where there's a lot of liquidity, right? Price will naturally trade towards those, which is why we can use them as targets or places to look for trades, because once we get to those levels, we should see more volatility off of those, right? Whether it's a reversal off of them, a fake out off of them, or a break and retest off of them. So as far as supply and demand zones, you can do this a couple different ways. I mainly like to use the 4-hour and 1-hour time frame. So if we go to a 4-hour, for example, we can see we have this supply zone. This is essentially what you want to see is you want to see like a small green candle followed by an aggressive red candle that closed towards the bottom. So you can see now you want to mark basically the body of the green candle to the highest wick point. Okay, so this would be like a good example of a supply zone. Obviously, we're pretty far from this level, but this is on a 4-hour time frame. But for example, right, this would be a great trade idea going into next week. If we get above our weekly high, right, and maybe we retest it, we should gravitate towards this supply zone if we hold above this weekly high. Okay, so we can have this as a target going into next week if we get above our weekly high. Or let's say you miss this move up and we start trading above here, right? Maybe we do a fake out, okay? So we trade above it and then we start reversing off of it, and then you can find a pullback to enter on, right? And ride it back down to our weekly high. Okay, so you have to look at the levels as places where, you know, we can either fake out, do a liquidity grab, or we can actually, break it, retest it, and then trade it up to the next supply zone, wherever that may be. Okay, so that's one supply zone area. I don't see any others on our 4-hour time frame. Now, going into the 1-hour time frame, we can see, let me just back this up a little bit as if like we didn't know what happened today. So I'm just going to back this up as if it was this morning. Okay, we actually had a supply zone right here that lined up with yesterday's highs a bit. So we can see this candle, we had a small green candle followed by an aggressive candle down where we closed towards the bottom. So I'd also mark this up as a 1-hour supply zone. So we just take a box from the top of the wick to the body, and then we can draw this zone, and then we can also label this as well, right? And then we're just gonna put down supply zone. This pretty much lines up with yesterday's highs, so it's pretty similar to that level that we already had marked. Okay, and then if we don't find anything else, I'm gonna go into a 30-minute time frame and look for something else. Okay, so we can see on the lows here, we have this demand zone. So we have this small red candle followed by an aggressive move up, and we close towards the top of the candle. So now I'm going to do the same thing, just the opposite way. I'm going to draw from the body to the wick, and we're going to extend this out as demand. We're going to mark this green. Then we can also grab a horizontal line, put this right here, and we can make this green as well. And we can label this demand zone. Okay, so that covers our supply and demand zones for the next few days. Obviously, as we get more up here or we go more down, we're going to have to look back in time and find other supply and demand zones as well. But we pretty much got most of it for the next few trading days, so our chart should be good going into today, for example, or the following day. So anyways, next thing we're going to look for is retracements off of our levels. So this is using Fibonacci retracements. It's something I like to use as areas where I can take off profits, or I can use them to enter if the price is pulling back in my favor, right? So if we're trending up and we pull back to a retracement, right, I could potentially get in on that retracement to keep riding the trend to the next supply zone, for example. So anyways, the way you like to do this is, I like to stick to the bigger time frame and then look for the tops and bottoms. So for example, first thing I'm seeing is this retracement right here. So we got this high point followed by the low point from yesterday. So going into this morning, right, I could have easily marked this out. So high point to low point. As we can see, this pretty much lines up with our zones. So we got the 61.8 lined up with our supply zone. So we don't really need to remark that. And then we also got the 78.6 lines up with yesterday's highs, so we don't really need to mark that either. So it's just like an extra confirmation for us that our levels are correct. So I don't really need to remark anything. The next thing we can do is look at like a 4-hour Fibonacci retracement area. And we can see, okay, where is the next high point? Okay, so we can see it was actually up here, and we can take it to the low. Okay, so you could actually had this drawn before any of this price action happened, right? Because the lowest point was right here. So the past 3 trading days, you could have worked with these levels from this high point. Okay, so what I'm going to do is I'm going to take my fib, I'm going to go from this high point to the low point, and then now we have our retracement levels. Okay, so for example, now I can draw a white line on this 0.5. Okay, we're just going to label this retracement. You can grab another level like the 0.618. We'll mark this up and label this retracement as well. And then lastly, we can grab the 0.786 and we can mark this as retracement as well. Again, all these levels can be used as targets if we're trying to go long, okay? So super helpful for targets. All right, so now that we have it all drawn, we can basically just delete this to make our chart look a little bit more clean. So anyways, we have our demand down here, and we can actually change this to green since this is the low. So we have our demand down here, we have our weekly low, that lines up, that makes sense. And then we have, if we're going long, right, we're bouncing off our weekly low, we have all these different targets to work with, all these different levels, to trade a break and retest off of, for example. So if we get above yesterday's highs, right, we can use it as a break and retest, okay? So maybe that looks like, get above here, right, trade it to this level, get above here, right, trade it to this level. So we can either use them as targets or break and retest areas to keep riding the trend long, or they could also be fake outs, right? So maybe this turns into a fake out, right? We grab liquidity and then we start trading to the downside. And now we can do the same thing with these levels, use them as break and retest to test the demand zone. Okay, so that's kind of how I like to use my levels. Next thing we have here, and this is more of an intraday level I like to use, and this is going to be the 15-minute orb. Okay, so the 15-minute opening range area. So the way I grab this is I literally just go to a 15-minute time frame. All right, so now I'm in a 15-minute time frame, and I want to mark the opening 15-minute candle, the high and low points of it. That'll be our opening range. So basically what I'm going to do is I'm just going to skip forward to 7:30 my time, which is the New York Open, okay, which should be this candle right here. And now all we got to do is mark the low and the high points. So we got the low point of this candle, which is right here, and we can label this orb. Okay, and then we have the high point, which actually lines up perfectly with yesterday's highs. So I'm actually just going to change this to the orb label. Now with this orb, I want to see if this lines up with any of our key levels, right? As we can see, this does perfectly. The orb was exactly yesterday's highs, and also if we get above here, that'll be above our supply zone. Okay, so this makes sense that if we get above the orb, we should see a leg up to our next level. If we get below the orb, we should see a leg down to our demand zone. And if you don't want to ride it all the way to the demand zone, let's say you get short right here, right? We can also draw a fib from the bottom to wherever the top was. We don't know exactly where the top is, but maybe it's here, right? We can have targets for the 0.5, the 0.618, the 0.786, right? As on the retracement as well. So this makes sense, right? Our opening range is by our supply zone. If we get above the opening range, it's also above the supply zone. If we get below it, that means we rejected the supply zone in yesterday's highs, and we should see a test down here. If we get above it, we should see a test to this next level. We can see that this is our retracement from this high way up here, okay? These are all our retracements levels, essentially from our weekly high, right? So this makes sense, right? Retracements right here. We do have resistance right here. That lines up. Next retracement is down here. We have some old support that could turn into new resistance. Aggressive selling right here. That makes sense. Last retracement up here, we had some old support, aggressive selling. So all these levels really line up. Remember, these retracement levels were just drawn from the fib. We didn't really go into the support and resistance, right? But you can use the support and resistance as extra confluence to the actual trades as targets and stuff, right? So anyways, now that we have all our levels, right, how do we actually trade this? Well, first we want to see a break of our opening range. So if we go into a 5-minute time frame, we can see, let's wait for a break above or below. As you can see, we tried to break above here. Okay, we dumped. We never closed above it. We tried to break below it, right, our opening range. As you can see, we wicked off of it. This is actually our news candle at 10 o'clock Eastern. And then let's see, now we're basically just chopping in this range. Again, we're sitting on our hands waiting for one way to play out. Again, we're in a key level. We're in the supply zone, yesterday's highs. We don't know what's going to happen. We're not here to predict the market. We're here to react off of these levels and trade accordingly to the next levels. So we're going to keep waiting. When are we going to break this? Okay, let's see. All right, we broke it right here. Broke it right here. That's confirmation. Got above the previous high. Okay, what do? We pull back to it. Okay, so we break. Now we're retesting. And now this is where you can go into a 1-minute time frame, or any time frame you want, really a smaller time frame, and you can start to look for a trade. So this is where you can decide if you want to use, more indicators or just raw price action. I also like to add in volume here as well. So what I actually use is, if I go to my chart layout where I'm actually looking for a trade, right? I call it the trap and flip strategy. It basically uses an indicator called the Williams Fix. And essentially what I'm doing is I'm waiting for green bars to show up on the Williams Fix, and then it'll display a white candle. So you can see a white candle here once volatility drops, meaning meaning sellers are getting exhausted, and now I'm waiting for a close above this white candle, right? This is where I went long right here on this trade. So for example, buy 5 contracts. I put my stop loss right below the low, that pullback low. And then from there, I'm writing it near my next level. Okay, so I'm putting my take profit near the next level, which is this retracement, okay, that we got from the weekly high. Okay, so we got this, we actually had this level marked like 3 days ago. Okay, if you remember how we drew this, right? So now we just let the trade play out, and you can see it eventually hit our take profit. Nice little 2-to-1 risk reward ratio on that trade. Okay, so if we go back to the 1 hour time frame, right, we remember where we got this retracement level, our profit target today. Okay, once we actually broke the supply zone and our opening range, right, remember we drew it from way up here. Okay, so we actually got this level like 3 days ago. So from that high to this low, extended out, okay, you can see it perfectly lines up with the 50% retracement from our weekly high. So that's pretty much it, guys. That's how I draw my retracement levels. Like I said, these can all act as targets or places to look for trades, whether it's liquidity sweeps, whether it's break and retest. And real quick before you guys go, if you guys want help with this, I draw my levels out every single day inside my private Discord group. If you go over to my trading plan, right, as you can see, I draw my levels out every morning in my plan for NQ. You can see my levels, my chart, all the labels of them, and all that good stuff. So if you guys don't know, this community is completely free to join. I don't charge you any money to join our Discord group. You get access to my trading plans every single day, along with the trading floor to talk and chat with all kinds of other traders in here as well. So if you guys want to join this, we'd love to have you inside the community. All you have to do is go to the first link in the description below this video, or just head over to this link right here. We'd love to have you inside. With that being said, guys, as always, I hope you have a great rest of your day, and I will see you in my next video with another day trading lesson.